Hi everyone, welcome back to Corporate Decoder, the place where we slice and dice those corporate filings. Today, we're diving into Altegris Winton Futures Fund, LP's latest annual report. Futures Partnership Advisors, it sounds like someone's trying to make things complicated, but stick with me and we will break it down. This is going to be a fun ride where we uncover if this limited partnership is hitting the jackpot or just spinning its wheels. So what is Altegris Winton Futures Fund, LP, or the partnership? It's basically a fancy name for a company that makes speculative trades and investments in international markets. They deal with futures, options, and forward contracts. Think of it as betting on where prices will go in the future on things like gold, oil, and even currencies. The company has been around since 1999 and is managed by Altegris Advisors LLC, who's registered with the Commodity Futures Trading Commission or CFTC. These government agencies make sure companies follow the rules, kind of like referees in a sports game. The company also uses an advisor, Winton Capital Management Limited, who helps with trading decisions. As of the end of January 2025, before any redemptions or withdrawals, the total net asset value, or the value of all the assets, was roughly $12.08 million. They offer different classes of interest, similar to different tiers of membership, which mainly change the fees that investors pay. The partnership's goal is long-term growth, not current income. It's like planting a tree hoping for a forest, not just picking apples. They picked Winton Capital Management to trade on their behalf, using something called the Winton Futures SNA program. It trades on futures, options, and similar contracts, basically betting on whether things will go up or down in value. The trading strategy involves a trend-following system. They look at past prices and volume to predict future price movements. It is non-discretionary, which means the trading signals are automatically generated by its models, and the advisor follows that robot almost to the letter. The advisor reserves the right to deviate from its automatic system only in unusual market situations. Investing in the partnership comes with risks. Global market disruptions can impact returns. The success of any investment activity is affected by general economic conditions. Cyber attacks could hurt the partnership. Commodity prices are highly volatile. The low margin deposits normally required in trading. Commodity interest trade may result in losses in excess of the amount invested. Commodity interest trade may result in losses in excess of the amount invested. Commodity interest trade may result in losses in excess of the amount invested. Commodity interests traded may be illiquid. There are no assurances of the advisor's continued services to the partnership. Any changes in trading strategies may adversely affect partnership performance. Foreign instruments may affect partnership liquidity as well. The filing now includes cybersecurity measures, outlining how they manage digital threats. They use password protection, firewalls, backups, and data redundancy to keep data safe. Senior management consults with the Chief Compliance Office and may hire third-party firms. The company recognizes the importance of assessing, identifying, and managing material risks associated with cybersecurity threats on behalf of the partnership. There's no public trading market for these interests, so it's not like buying stocks that you can easily sell. However, limited partners can redeem or transfer their investments, but there are some conditions. There is not a high degree of liquidity. Let's dive into some numbers. In 2024, the partnership had total net realized and unrealized gains of $621,959. Compare that to the year before, 2023, when they made $1,121. They made $1 in 2061. In 2022, $3,347 at E27, $2,726 odds earned in 2023. So in 2022, $3,346, so 20 on dollars, 805 in dollars at $727, and 2450 on $3047 at $747 and $658. It seems like the gains are shrinking. $723. The rate that's less than the $740,130.22, $3,347,000, 2047, 27, 1 for 2070 and in 2023. That's less than the 720 throughout the 139 Fonty 23 thought the partnership made less money than. Net income for 2024 was $334,937. That compares to $922,132,000 2029 into $429,522 tariffs. 50,000 AT, $47.40 total assets for 2024 is $1 $5 than bosate 2024 is $13.05 and before the total assets for 2024 is $1 great year. Also a decrease in total assets. Looks like 2024 was not a great year. The partnership says that their assets are generally in cash or things that can quickly turn into cash. They need these liquid assets to cover their futures positions and pay for any redemptions or expenses. They said through the end of 2024, the partnership experienced no meaningful periods of illiquidity. In the fourth quarter of 2024, global equities rallied, bond yields generally rose, and the US dollar strengthened. This environment was tough for trend-following strategies because those strategies try to take advantage of long movements. While agricultural commodities made some profit for the company, the fund ended the year with positive performance. During 2023, the partnership reported a net realized and unrealized gain of $969,536 from all trading. That compares to the previous quarter, where the partnership profited of $3,507.81 from all trading. In markets, currencies were among the biggest movers during the second quarter, while yield on government bonds resumed their uptrend and commodity prices mostly fell, with speculation around the global rate trajectory in 2023. The partnership experienced losses during the first quarter of 2023. The partnership's market risk is influenced by lots of things, including exchange rates, interest rates, and overall market vibes. They use something called value at risk, or VAR, to estimate how much they might lose in a day. This is just an estimate, so don't take it as a guarantee of what will happen. The one-day VAR at the 95% confidence level is around 78% in 2024. 1,029% in 2023 is a measure of the potential loss in value of a portfolio over time period for a given confidence interval. The partnership doesn't have typical employees. It's managed by Altegris Advisors LLC, with Matthew C. Osborne as the Chief Executive Officer and Chief Investment Officer. A recent internal reorganization means that Continuum Capital Managers LLC and AV5 Acquisition LLC indirectly own the general partner. So there have been a few changes behind the scenes. As of January 31, 2025, the general partner interest in the partnership was valued at 3,766 sats, which constituted 0% of the partnership's total assets. The fees paid to the auditor, Spicer Jeffries LL, to $49,500 each year. These are pretty standard costs for keeping the books straight. There are no insider trading policies, so the partnership has not adopted standalone insider trading policies. The general partner has adopted insider trading policies and procedures. To summarize, the financial statements paint a picture of a partnership that's still afloat, but facing headwinds. Gains are decreasing, expenses remain high, and there's a lot of reliance on external factors. Despite the optimistic language, the numbers tell a story of tougher times, and the internal restructuring and changes in fees also don't necessarily boost investor confidence. So, is Altegris Winton Futures Fund heading for a turnaround, or will the trends continue? It's a question that investors should seriously consider. Thanks for watching Corporate Decoder. Don't forget to like, comment, and subscribe. It helps me keep the lights on as I decode these complicated documents for you. I will see you at the next one.